Welcome back to the What You Want More podcast. I'm your host, Quentin Harris, and we are joined by a special guest today, John Foong, who is going to be joining us from Australia, believe it or not. So this is a late night podcast for us. We talk about the sunrise ones here at the beach. This is not one. This is going to be a late one. And John, you woke up early to be with us this morning. Thank you, my friend, for being on the show. We are excited to have you here and to talk real estate in Australia compared to the United States, as well as your Uber background and Google background as CRO. This is going to be an amazing podcast because I think it's going to shed a ton of perspective for our audience of different things in different parts of the country compared to what we're dealing with. So, John, welcome to the show.
Thank you, Quentin. It is a great pleasure to be here, and thanks for your service. Wonderful show that you have for us.
Oh man, we appreciate you saying that. And I got to tell you, I'm already loving the accent, and we're only 2 sentences in. So this is great. This is great, and I loved how you signed your emails, mate. That always is. I'm like, oh man, this is super cool. So John, tell us a little bit about for our audience. Let's start with the simplistic format. You have a CRO background. Can you kind of break down what Chief Revenue Officer means? And what you've done at organizations like Google, Uber, and now with Domain?
Sure. So CRO stands for Chief Revenue Officer. And what it basically means is this is the person responsible for delivering the revenue for the whole company. And that's my job here at Domain. Domain is about 1,000-person company based in Australia. It's like a Zillow. It's like a Redfin. We help people find properties, and we help people sell properties, and we help real estate agents, make the match. So that's what I do, and I'm responsible for the revenue of that particular company. CRO is similar to head of sales. In the past, you might have called it sales leader or head of sales. I think the thing that's a little different is ultimately, yes, I'm responsible for the sales. I'm also responsible in this case for the customer support. If people are unhappy or need help or have a problem, I have a large customer support team that does that. My responsibility is to sell, but it's mostly to create the environment where sales happen. So, for example, maybe we need to have really, really talented salespeople to sell multi-million-dollar deals to big real estate agencies. And maybe we also need a self-service portal so someone who's just selling one small property can do it themselves. So it's a little different to a classic sales leader role where it's like, great, I'm on the road, I'm selling the whole time. I am on the road meeting with customers a lot, but I'm often thinking about, is it easy for them to purchase? Are they getting the help they need? Is there an easier or better way of doing it? For example, self-service or upselling or things like that. So that's what my day-to-day is comprised of.
No, that's great. Thanks for breaking that down for us. And, one of the things I heard you say there was it's like a Zillow. It's like a Redfin. Are Zillow and Redfin competitors of yours in Australia?
No, Zillow and Redfin are only, as far as I know, in the US. And so we are only in Australia and parts of New Zealand. So if we were in the same geography, we would be competing. But there's real estate portals like Zillow tend to be country specific.
Gotcha.
Because each country is quite idiosyncratic. And so we don't compete per se.
Well, I love the fact that, and I'm going to get into Domain and what you guys are doing over there. And I love how you're bringing buyers, sellers, and renters and everyone together on one platform. It's a rather large one. Matter of fact, it's the largest over there. I can't wait to talk about it. But before we do, can we unpack a little bit about your time at Uber? And I think that, and Google as well, for that matter. I mean, I know you were highly involved over there with the team at Google Cloud, but, Uber, it's interesting to me. How long were you with Uber? How much time did you spend with them?
I mean, not that long in the big scheme of things. I was there for 2 years, from 2019 to 2021. So by that time, Uber was already quite strong. It was already the number one rideshare. It was after the kind of crazy startup days.
Yeah.
And my responsibility there was to grow the business section. So I ran, the business accounts and customer engineering for people using it for business travel and business eating.
Yeah, and you had to do that. And let's talk about this. Only there 2 years, but what felt like probably 10 years during 2019 and 2021. You're there during the height of COVID. And I mean, depending on what part of the country, and where this was taking place, everybody was using Uber to have stuff delivered to their house.
It was crazy.
It had to explode during that time.
Yeah. So what happened, just to play it through, and this is in the year 2020, of course, as we have tried to forget, but no doubt still remember. Basically in March 2020, April 2020, the whole world fell apart, and two things happened. The number of people riding went down by 99%. I mean, who's going to take a car ride when you don't know what the pandemic, what this virus is, who might catch it from, whether you're a rider or a driver? So the entire revenue stream went to near zero overnight.
And you had nowhere to go. nowhere to go.
And nowhere to go. Nowhere to go. I mean, the only people were, public health workers and essential workers, and that was very, very important, obviously. But for most people, like, no one was traveling. Everyone was at home. And at the same time, we had an explosion of Uber Eats. It was actually quite a small business for us. And it went from being like, 10% of the business to almost 100% of the business, overnight. So you had this kind of amazing diversification for Uber. And it was really on the back of COVID that not just Uber Eats, but DoorDash really exploded as at scale. So it was, I guess in retrospect, it was very exciting. At the time, it was terrifying, I think, for everyone.
Yeah. Well, you guys did a great job of pivot and, your industry and what you guys did over there. But I think what I heard there was that, Uber had always done ride shares and found the consumers' want and met it with their need with how they could help. And then here comes COVID. They did the same thing. They found a consumer need, and then they found a way to meet that need. And I think that's something that organizations like Uber and DoorDash have done a pretty damn good job of, and how they've survived, and also I shouldn't say survived, how they thrived is really the real aspect of it. They've done a really good job. So it's cool that you were a part of that, and that part of that pivot as well. And just talking a little bit about your time at Google. How long were you with the Google Cloud team over there?
I was with Google overall for 13 years. It was a long time.
That is a long time. Yeah.
A long time. I started off as an intern in Europe, based out of London in 2006, and then joined full-time in Ireland, in Dublin, Ireland. I was there for 6.5 years. And during that time, I worked on both the search engine in marketing, and then I took a sales position in Google Cloud.
Wow.
And I ended up being in Google Cloud for 10 years, half that time in Ireland and half that time back in Silicon Valley.
So, John, I got to ask you, and I know you probably have answered this question a million times. Have you seen the movie The Internship?
I've definitely seen the movie.
Okay. Yeah. So as soon as you said Google intern, that's the first thing that came to mind there. I'm like, oh, man.
That's right.
Yeah. But what a great movie. That's what I was thinking and processing there. Owen Wilson and, Vince Vaughn there. But it sounds like that's a great company to work.
And the funny thing is, and I left Google 4 years ago, so, things have changed, and it's become bigger and probably a little bit more frugal since then, just given some of the things that have happened of late. But I really think the internship did a really nice job of capturing the feel of Google. That kind of beauty, that kind of curiosity, that naivety, that sense of fun, that geekiness. Cool. That's what it really felt like to be there. It was really quite amazing. And a lot of the things, the perks, the free food, the nap pods and the massages, they were all true.
That's real.
True at the time. So
oh, wow.
That is real. I'm not sure if it's still real, but it really did capture the feel of what it was like to be not just a Google intern, but at Google. I felt like a geeky kid in the candy store for my time.
That's awesome. So now you've made your way over to Domain in Australia, and let's talk a little bit about that platform. You guys are out there meeting consumers' needs. Your largest place where people can buy and sell real estate and lease and rent real estate platform online. But you're taking people from all over the country and bringing them together to help do this. Plus, bringing real estate agents together as well. And
that's right.
As the CROs we just discussed over there, you're also lead sales and director and all kinds of hats that you're wearing over there. Talk to us a little bit about Australia real estate. Tell me what's going on over there, because I feel like we got a good grip over here on the United States territory, but I'd love to hear what's going on over there.
Yeah, and as I answer that question, I think to your point, the genius of whether it's Domain, the company we work for, an Uber, or even a monster.com, an indeed.com, any marketplace, is that you're solving different people's problems at the same time.
Love it.
Right. So for example, Uber, you're solving, I need to get from A to B. I'm a rider, but as a driver, I want to make $15, $20, $25 an hour on my terms at my time. Mm-hmm. And that marketplace solved it at the same time, and that's the genius of Uber, of DoorDash, and things like that. And at Domain, you have three different problems. You have a buyer who wants to find a property, you have a seller who's trying to sell a property, and you have an agent who's trying to make a commission by bringing the buyers and sellers together. And that's basically our role, to make those three parties happy, to create a platform where they can come together and meet each other in a way that's trusted, that's easy, that's fun, that inspires confidence. And so that's pretty much our world, similar to what the Zillows of the world are trying to do. And in answer to your question, what does that look like in Australia right now? Things are picking up.
Okay.
It's similar to where the US is at. It's a little different, and I'll talk about some of the nuances right now. But effectively, we had COVID, where we all thought the world was going to end. Mm-hmm. Then after COVID, in America, we had one of the greatest real estate booms in history. Yeah. In terms of two things, in terms of house prices and volumes, and they tend to play off each other. And you saw overnight, increases of 10, 20% per year over the course of just over a year, just massive, massive increases, which were kind of unexpected because we didn't know what to expect.
Right.
Then as interest rates started to go up, 18 months ago, and you had this inflationary effect, which was not just transitory, but something where central banks like the Federal Reserve said, oh, okay, like we've got to get on top of this. Interest rates went up a long way, and the expectations they would keep going up, they would keep getting hiked. And interest rates are probably the single biggest, as you know, impact on house prices. Because, interest rates are going up, I can't afford to borrow as much, and interest rates are going up, I'm not sure what that's going to mean. I will probably not try and sell my house now unless I really, really have to. And what you find is for every 100 sales, 70 sales have to happen, even in the midst of a recession, because people are getting divorced and empty nesting, someone has died, someone's been born. That's kind of unavoidable. It's the 30%, of sales that can wait because it's an investment property, or we need to sell, but not right now.
Right.
And what we found is during the post-COVID boom, all of those discretionary sales got brought in. Anyone who could possibly sell tried to sell. And then on the flip side, what happened was once interest rates started going up, there was this uncertain environment. Then anyone who could not sell tried not to sell, right? Anyone who could not buy tried not to buy. And that had an impact on both house prices going down, due to people not being interested in buying, and then the amount of volumes that people are trying to sell going way down. And that's how portals like Domain make money, is the number of people trying to sell their house, as well as the number of people trying to buy a house. When those two plummeted, it was a very difficult time for portals like us, for real estate agents, because the life just got sucked out of the market.
Yeah.
And so that was the past 12 months, as you and many of your listeners who are in property know. Though the past 3 or 4 months, it's really picked up again in Australia as inflationary expectations has stabled. And now the expectation is they've just about peaked, maybe one more hike, but will probably go down next year or two. And people have adjusted their behavior as a buyer. They go, okay, well, interest rates are high. I can't afford this much, but I can afford this much. And they feel that stability. Oh, unemployment actually hasn't gone up that much. We're probably not going to hit a recession. I'm probably not going to lose my job. Or if I do lose a job, I'll probably find another one. Therefore, I have the confidence as a buyer to actually get back into the market. And so you've got seller confidence that kind of prices are coming back, that, there's enough liquidity in the market. You've got buyer confidence. And so as a result, both volumes and house prices in Australia are picking back up again.
Yeah, no, John, that was a great answer. There's a lot to unpack there, man. So let's go through here, because you're now talking my language, right? You're in our wheelhouse over here. Inflation, interest rates, Federal Reserve, that is what we do all day long. So let's start with, when buyers look for homes, and do they typically turn to an online platform first? Is that normal tendency over there? Okay, same kind of a little bit over here as well. They turn to the online, start scouring themselves, and then they find an agent, right? Okay, so same concept. Yeah. What is your current, you talked about the Federal Reserve, over in Australia, what's the current interest rate? Give me an interest rate of what we're looking at over there.
It's about 4% right now.
4%.
And that's, again, that's not the retail rate. That's the rate that the government is charging.
Right. So that would be your equivalent to our Fed funds rate. So that's your 4% there. So what would an average consumer obtain a mortgage at over there?
6 to 7%.
Okay, so we're in the same now. We're in the same ballpark almost. Just about, we might be a little higher over here right now. Are you guys seeing? You talked about how there was inflationary concerns. What does inflation in Australia look like right now?
Inflation has come down a long way, not as much as the US, but it's around 6%.
6%.
Right. It peaked about 9 or 10%. That was a few months ago, and it's come down very rapidly, similar to the US.
Yeah. And so I think it's important for our audience to understand. So, we talk about this on here, that when the Federal Reserve goes on these rate hikes like they're doing, the amount of pressure that they apply to the central banking system is tremendous. And I think a lot of people can't understand it when we say it. And you're talking about it firsthand here, because, for a lot of people, they don't understand that when we raise rates over here at the rapid rate we're doing, the dollar becomes stronger. And that's not by intention. It's just a byproduct of them raising it. So what central banks in other countries have to make a decision to say, well, do we want our currency to stay weaker, and keep deteriorating, or do we want to move at the pace the Federal Reserve is moving at? Maybe not the same rate hikes, but we need to have rate hikes in the similar manner in order to keep up with the inflated dollar, because that's literally what it is. It's inflated at that point.
Yeah, I would say that the challenge that Federal Reserves outside of the US have is because and the Euro Bank is a different challenge, because they have 30 countries they're trying to manage. But if I just take Australia, you are trying to satisfy multiple goals with the same sledgehammer, which is interest rates. Yeah. So one is, as you talk about, you don't want that disparity between Australia and the US, which is one of the most traded two currencies in the world.
Correct.
But you don't want that to be too big. If suddenly the US, finds it's that much more attractive, you'll see this flight of capital away from Australia, and that will have implications for, the cost of imports, the cost of investing, et cetera, et cetera. So that's a reason to hike interest rates. of course, or to follow the US interest rates as they go up. The flip side is, of course, the more you raise interest rates, the more you affect the local investing environment, the more you discourage investment employment, in Australia. And right now, over the past year, those goals have been aligned. Australia is trying to keep up with the US and make sure the investment environment is kind of similar. And they have tried to take the heat out of the economy, just like the US has. There have been many jobs per unemployed person in Australia. It's been very easy to get capital. And then, it's been easy there for businesses to heat up, consumers to spend a lot, and business to be able to kind of raise prices, which results in inflation. The problem we're going to have in Australia is if those goals diverge. Right? That is, if the US keeps rates high because they want to keep its environment not too hot, and Australia wants to cut its rates because maybe unemployment starts to tick up as it is. It's still under 4%, but it's gone up a few tenths of a percent over the past few months. That's when you might have some challenges because of to lower rates to get people investing again and spending again. But actually, we want to keep rates high so the US doesn't look too attractive to Australia. So it's going to be interesting how the second year plays out. But so far, we've been kind of in lockstep.
No, that's great. Do you feel like employment over there is easy to find, but hard to find workers? So if you're an employee and you want to find a job, it's available. But for employers, it's tougher for the employers to find the help to satisfy the position.
Yeah, it's a very similar dynamic to the US in the sense that what has happened over the past, since COVID, is particularly blue-collar workers have increased wages significantly, and they have had a lot more, purchasing power as employee, right? So their salary has gone up, and there's many, many jobs, whether it's in services or construction or things like that, where it's like, oh, wow, we have many jobs to choose from. It's an interesting dynamic. For example, in Australia, we're trying to construct more homes. We have a lot of immigration coming in. Everyone wants to move to Australia. We're trying to build more properties, build more developments, more condos, et cetera, et cetera. They can't find enough builders because the number of builders hasn't grown as much. Builders have become better paid and actually now don't need the overtime spend. So actually the amount of building capacity has gone down, even as the desire, for new construction has gone up. So it's this dynamic where the employee, the worker, actually has a lot of choices still, whether they're employment, whether they're in construction, in services, to a lesser extent white collar, but that's an extent, but that's true as well. So that's a reflection of a lot of jobs available and still a relatively low 3.7% unemployment rate.
Wow. Now, when the builders are not building as much, obviously that's putting constraint on your inventory. Is that making
inventory?
You mentioned earlier, you got these sellers, we call it the lock-in effect. They're locked into that current interest rate they have. They've got that low payment. They don't really have a need to move. I got in a spirited debate with someone the other day about, oh man, they told me these sellers are just going to have to lower their prices. And I said, well, I can't wait to hear this. Please tell me why you think that. And they said, well, if they're going to sell their home because of affordability of the interest rates, they're going to have to lower the price. And I'm like, I think that's the issue. They don't have to sell their homes. They've got these low interest rates, and unless they get divorced or a death in the family or the household formation becomes so big, they're going to name their price. I mean, they don't need to sell it, Are you guys experiencing the same thing?
Yeah, we're seeing both. It's probably most profound actually in the rental market.
Okay.
So typical vacancy rates at 2 to 3%. It's been well under 1% in Australia for a long time.
Wow.
Right. And that is just, if you want a rental, you're going to pay a lot of money, right? Wow. And you may not find what you want, right? So you've got that supply constraint, which is very significant for people who don't own a house, which is almost half the population. And then the flip side, you're right. What's the same dynamic in selling? Like people don't want to sell. They don't want to sell if the house prices have gone down, if they think they can't get a good price, and if they think that their own financial situation is a bit insecure. They're only going to sell if they absolutely have to. They absolutely have to. And so that's what's been the case for the last 12 months, where people just held off, right? So you've got a lack of options for buyers and for renters, and sellers and landlords are kind of holding on. Right now, as I said before, it's unthawing quite a bit, actually, because you've got that stability, because it's unlikely to be a recession in Australia, and because buyers have been back for a while and prices are coming back up. Sellers are going, oh, okay, I think I can sell my house. I think I will sell my house. I don't have to. And so that's why we're seeing a recovery in the Australian market.
That's great.
Probably much more so than the American market right now.
Yeah, so it sounds like you have buyers that have settled in. They know the interest rate. They know it's not moving in the direction that's going to be lower like it was 2 years ago. They've already wrapped their head around that. They're adapting their price points to that interest rate. Is there a theology that, you continue to, you may not be getting 10, 20% appreciation, but you're still seeing appreciation in your market because of lack of inventory, and then there's rent demand that's happening. So you got to make a choice. Am I going to overpay for rent, or am I going to suck it up and buy this house? So is there a notion that, hey, listen, buy now at this interest rate, you can always refinance later? Is that something you guys are preaching and really selling hard over there?
Yeah, I would say, so a few different comments. I think our philosophy as a company, and certainly my personal philosophy, is you should buy at the time that's right for you.
Okay.
Don't try and time the market. Maximize your time in the market.
Okay.
That's
I like
that's very much my philosophy. And certainly as an investor myself, I've been investing in property and houses, the last 25 years. I've always done that. I said, I don't know when the market is. All I know is my circumstance, when I have money, what my goals are, and that's what I'm going to solve for, and trust the market over time will look after me. So that's one point. Just to go back to your point about price increases and decreases. So again, I'll quote very similar numbers to the US. You had this pandemic, prices went down by 10% overnight, Post-pandemic, over the next 18 months, prices went up by 20, 30%, in a year and a half. Astonishing growth. And then that kind of peaked, about, I would say 18 months ago.
Okay.
And then since then, we've seen decline in Australia from peak to trough of about 10 to 15%.
Okay.
Right? And again, you got to remember, that's come after an increase of 20 to 30%. So house prices are generally still higher. Again, I'm making national generalizations in Australia here. Still higher than they were kind of like 2 or 3 years ago, but they've come down 10 to 15% from their peak. And people are anchored down. Oh, my house is worth this much. Now it's worth this much. I'm not going to sell until it gets back here. As a result of the lack of supply, as a result of the economy recovering a little, right, the confidence returning a little, of that 10 to 15% drop, about half of that has been recovered.
Wow.
So now they're only about 5-7% off their peak. Places like Perth and Adelaide are actually at new peaks. Sydney's only down 2-3% off their peak, right? So you're seeing a lot of these markets where house prices are near all-time highs again. And that's why you're seeing a lot of sellers going, okay, great, I'm going to cash out. I really need to do a year ago, but I've been holding on. So that's the dynamic that we're seeing in Australia, which I know is a little different to many parts of the US. But so we're seeing that confidence return, which is nice after a difficult 12 to 18 months.
Yeah, I think that's fantastic. We're at a standstill right now, and there's certain pockets, of course, in the U.S. that are going to have a different outlook. But what you have here is we have a seller that the property continues to go up. It's at 2-3% in some areas, some it's at 10, but it's still going up in these high interest rate environments because it's simple economics for us. It's supply and demand. We have too many buyers and not enough properties, and we can't keep up with these new buyers that are coming to the market, which is a new age group of birth rate millennials every year that are making their way to the market. We just can't keep up with their demand and the current demand. And so we've got this standstill where sellers are going, well, John, if I'm going to sell you my home, here's my price, right? That's you're going, oh, God, I don't know if I want to do this, but I mean, we keep missing out on these homes. We're just going to go ahead and do it. We'll bite the bullet. We'll do it. And then we get into this inspection period, right, of the contract, and something that would be considered normal or not crazy causes a rift between the buyer and the seller because the buyer's like, well, if I'm going to pay this for the property, it better be perfect. And the seller's like, hey, this happens all the time. I'm not changing anything. I don't have to sell this home. And we see deals fall apart. I think last month, the stat was that 15% of all transactions that were under contract fell apart last month. And we've got this butting of heads right now. And that's a market that's real for us. And until, and we're even starting to see some multiple offers come back. And when these interest rates, and I'm sure in your market, this is going to happen too, when these interest rates do recede and come down, and that's going to happen, it might happen in the next 6 or the next 12 or next 18, but when it happens, this lock-in effect that's going to become unlocked is going to create a frenzy of buyers. And it's going to be like musical chairs of real estate all over again. Might be the biggest year we've ever seen.
I know, it will feast and famine, right? And I'll tell you one factor that's actually different to the US, and just so you know, I still follow the US market quite closely because most of my investments are still there.
Okay.
I only moved back to Australia 2 years ago. So we lived in the US for 10, 15 years. So that's
I can tell you keep up with. You're very sharp on what's going on.
But, one thing that's good and bad about the US, or it's good, but it has some side effects like it caused the freeze that you're talking about right now, is we have 30-year mortgages in the US. And that's what most people have, right? I think it's 2/3 of mortgages in the US in 30 years. And certainly for us, that's what we've tried to lock in. In Australia, that's not the case.
Okay.
In Australia, most people don't lock in. And if you lock in, it's for 2 years. Right.
Wow.
And the reason behind that is we don't have mortgages that are traded as securities like bonds, which is, I think, a very positive, sophisticated market that the US has. And so what that means is when the interest rates have gone up, right, actually everybody pays that. Not just new home buyers, like is in the US, but everybody pays that. And in some ways, that really hurts for someone who's bought property here in Australia in the past year. You see that you don't have like this honeymoon period of 7 years, 30 years, whatever it is. Your interest rates are going up. They're variable, both up and down. And in the US, that's not the case, right? If you've got a 30-year mortgage, even if it's 7%, for a new mortgage now, you're locked in at 3% or 2.8%. You got, and the problem with that is, if you go back to why would a seller sell, it actually raises the bar for a seller to sell, because the seller sells and they're intend to buy again, which many sellers are because they're downgrading or empty nesting or whatever it is. Mm-hmm. That means they're going to pay much, much more for their mortgage. They're going to lose that 30-year mortgage. Right. So they're going to go from 2% to 7%. And so that means if you're a seller in the US, everything's got to be perfect.
Right.
It's going to be perfect. Right. And so that's why you're seeing these deals fall apart, right? Because people are going, take it or leave it, man. Like, if you don't want to buy, then I don't want to sell, man. Like, it's fine. Right. And so whereas in Australia, you're already paying these high rates. Some people are actually selling because they're distressed. Right. Because now, so it actually has meant the US has had to be more aggressive with interest rate hikes, because they have to push harder for people to feel the pain, which will then also drive inflation down. In Australia, that pain gets felt earlier because everyone is paying more on their mortgage unless you bought in the last 1 or 2 years.
Wow, that's incredible. So just so that I can recap for our audience, you're saying that you can only lock an interest rate in for 2 years in Australia, and then the following years, everyone shares in whatever hikes, or you win in whatever decreases happen during that time as well. So because of the pain point of all homeowners after year 2 are feeling and sharing in that rate hike, it does inspire them for affordability purposes to maybe sell earlier and often.
That's right. That's right. I think in times like this, it means that the Federal Reserve, or the Reserve Bank, as we call it in Australia, their impact is seen more quickly.
Yeah, I can see that,
which is ultimately a good thing.
You're getting your results much faster than we are. If you're tackling inflation, you raise that, you're going to see a quicker. It gets felt to the consumer much quicker than we have to go through this credit tightening cycle, and then that has to go through the cycle to make its way down to the consumer, which is usually about at minimum a 12-month cycle. I mean, you're seeing you're probably seeing it, and you can see it in 3 months there, depending on what year that person's interest rate expires. That's incredible. That is incredible. Right. Oh wow. So talking about real estate here, our average first-time home buyer is about 32 years old, 33 years old. How does that look in Australia?
I don't know what the average age is.
Okay.
What we are finding is that the age of home buyers and owners is getting older. Okay. Because particularly in places like Sydney and Melbourne, the average price is just very, very high. And unlike the US, we have over half the country live in those around those two cities. Mm-hmm. And in those cities, the average selling price is about almost $1 million US dollars. So actually, the affordability for most people, imagine that most of the country was a San Francisco or a New York. Right. That's what it feels like to be in Australia. So we actually have home buyers who are getting older. And a lot of home buyers can't afford the deposit, or they're borrowing from their mum or dad. Yeah. I think 40% of buyers here in Australia need family funds in order just to make their deposit.
Man, wow. It's incredible. I'm saying we have our fair share of that here, but definitely not. I mean, I couldn't imagine the whole country having to live in San Fran or New York price points. And that would be a big issue. It would be devastating to us. Thank goodness that's not the case there. So, obviously you go around, you do a lot of speaking. You can tell you're sharp as a tack, man. You know your stats, what's going on. You're top 40 speaker, doing this kind of topic manner here. As you go out and you do a lot of presentations on this, are you talking mainly to real estate agents, or are you talking to consumers? Like, what's your platform aimed at?
So my particular platform as the Chief Revenue Officer is primarily at real estate agents in Australia. So there's about 55,000 of them in Australia, about 10,000 real estate offices. It's much, much more than the US, but still a very meaningful, a very rich industry here. Yeah. And my job is to help them make decisions, because ultimately they are trying to bring buyers and sellers together. We're giving them information. We have a lot of information domain. We have a lot of researchers, economists. We're sharing what's happening in the market, and we're trying to create products that are really appealing to both buyers and sellers and agents. So that's a lot of what I get to do. We publish a lot of information for mums and dads. So we in partnership with the largest newspapers here in Australia. So we're constantly publishing multiple articles a day about what's going on in the market. Also things like what celebrities are buying. Like, it's all sorts of stuff to people interested and aware and building their property knowledge. So that's a lot of what we do to the consumer, so that when it comes time for them to buy or sell and work with an agent, they're more educated.
Oh, that's great. I mean, I love that concept. And, we've got a co-host of mine that's on the show quite a bit, Dr. Alex Stewart, and he's with the Market Distillery. He does a lot of the similar things you just described. And I think it's just a really cool, it's a really cool value add to your partners or to real estate agents in general. But did I hear 55,000 real estate agents in Australia?
Yes, that is true. The 55,000.
I think we would kill to have that here. We'd sell some properties if we had 55,000 agents in the entire United States.
Well, I mean, to be fair, I think the number is it's about 10 to 20 times the US. It's a lot.
Yeah.
I think an eXp or a Keller Williams might even have that many agents themselves.
Right. It's yeah. I think we do. We have close to 1 million agents in
the country.
The country, and it's and that's our biggest challenge. We talk about it all the time. Is that when you have too many agents and you have so little property sales, there becomes the feast or famine thing that you talked about. It was like, oh man, here we go. So it definitely makes for a difficult market there. So as we kind of start to close out the podcast here, tell our audience here a little bit more about Domain, and if they want to find more information out about Domain, what's the best way for them to take a look at that?
Sure. Well, I know most of this audience is not based in Australia. We publish a lot of white papers just about the Australian property market and what's happening economically. Our website is domain, domain.com.au.
Okay.
That will take you to the main portal where you can search for properties. But if you want to look at our research, go domain.com.au/research, RESEARCH. And I'm pretty connected on LinkedIn. That's where I do a lot of posting of my own insights and things like that. And my name, you can see in the podcast, but John Foong, Foong. I don't think there's too many John Foongs in Australia. So you'll find me pretty quickly. Yeah. But certainly would love to connect with you in the industry, and we can learn from each other. Yeah,
I tell you what, man, you're very active on LinkedIn. I know we've only been connected for a few weeks now here, but I see all the activity posts on there and all the stuff you're doing. It's great. And I always appreciate associating with people with like minds and learning more. Like I took so much out of what we talked about today from just a global scale. I appreciate you sharing that and kind of bringing it down to the US level to help kind of my audience and myself understand that a lot easier to digest as kind of understanding what's going on over there. So I just appreciate you being on the show. And I mean, again, let me repeat for the audience here. My man got up early in the morning Australia time to meet with us to do this here. And if you don't understand the time difference, we're not talking 2-3 hours here. So it is definitely a different time scale here. But I just really appreciate you coming on the show today, sharing your knowledge with us about your market, and then relaying it how it equates to our market. I think our audience is absolutely going to love this and appreciate it. And guys, if you like what you're hearing, 5-star review this podcast. Please leave some notes on here for us. Check out our YouTube channel. We're going to have some graphs. We're going to have some things that we spoke about in here on the show, on the channel. If you subscribe, you can find that at What's Your One More with the number 1. And then check us out on our socials. We're going to have a lot of reels from this episode on there that we're going to share at What's Your One More on all platforms. And John, just can't thank you enough for being on the show, my friend. This was a fantastic episode. And I love talking real estate, and I love talking economics with people, especially people that know a lot about it as well. So your insight was wonderful today. Thanks for being on the show, my friend.
Thanks, Quentin. Great to be on here, and credit to your listeners for building, this great industry, this great profession.
Thank you. See you soon.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put them all into it, yeah.